great pleasure to be speaking to Kevin Daly, Aberdeen Standard Investments. Kevin, thanks for making the time during your visit here to Nairobi. Maybe you can just tell us a little bit about Aberdeen, what exactly you're doing in Nairobi, what kind of funds you manage.
Sure. So Aberdeen Standard Investments is a FTSE 100 company. It was a merger with Aberdeen and Standard Life just over a year ago. We manage over 600 billion collectively at a firm-wide level. Very well known as a large emerging market manager. In terms of what I do specifically, I'm one of the senior portfolio managers on the emerging market debt team. We manage 13 billion in emerging market debt, invest across EM markets from LATAM to Asia to Central Europe and Africa, Sub-Saharan Africa, and
so that's part of that. Africa's part of that.
Yes. Yeah, correct. And I focus a lot of my time on looking at Sub-Saharan Africa.
Yes.
Yeah.
So you're here visiting. I think you were in Zambia earlier.
Yeah.
That's been quite an interesting scenario. Tell us a little bit about what you're seeing on the continent. I remember, and I was mentioning it to you, that I'd gone to a presentation and practically every African Eurobond at that time last year was within 50 basis points of the other. It was a cluster. Mm-hmm. And I kept thinking to myself, this doesn't make sense. But this has changed, hasn't it?
Yeah, it has changed for several reasons. One, we've got a much more difficult external environment where investors are now starting to differentiate between the good, the bad, and the ugly. And there's definitely been some parts of Africa which would qualify in all three of those categories.
Yes.
I think from an investor standpoint, there is a lot more emphasis now on looking at the stories where there is some potential upside or downside risk and whether it's priced into the market. This is, you can almost say this year though is a tale of two halves as well, because earlier this year we had a huge pickup in debt issuance. So, and what really was striking.
But that timing was quite good because actually the market rallied into that period.
Yeah, it was a great timing. And what was striking about that period too was it really became the onslaught of Africa long bonds, right? We saw 30-year issuance.
Yes.
Yeah, Kenya, Ghana, Angola, Senegal, Cote d'Ivoire.
I saw the Ghanaian president was talking about a possible century bond in China.
I think he was misquoted there.
Was he?
Yes.
Was going like
no, I think that was a little bit, I think that was on the sidelines of the China-Africa summit,
Yes.
And I think he probably got a little bit excited. And that did jump out at me as well too. But I don't think we're quite ready to buy African century bonds yet. So.
But it's interesting that we've seen this sort of extension in the maturity and that the market has taken all this supply.
Well, Nigeria was the first one to do it in late last year. And I remember we had a very small meeting with the delegation, met with the the then finance minister, Kemi Addison. We had the central bank governor, Emefiele was there. We had the DMO team there. And we said, look, if you're going to do 30-year issuance, make sure you price it correctly so investors will be interested to buy that new 30-year bond. And they did a good job with it in terms of the demand was very strong for the Nigeria 30-year. So then we get into 2018, and then the first one I think was Kenya actually. And that was an interesting situation because we had the slight hiccup/delay of the issuance because of this issue with the IMF, where the delegation was telling us that we're in discussions with the IMF to extend the rollover the SBA, and everything's fine, right? So we took that as faith. And then a day later, there was a story out that the IMF said no, the actual SBA has expired because of again the fiscal issues. And that's when the deal was delayed by 24, 48 hours. And I think it certainly cost them at least 25 basis points.
As much as that?
Yeah, possibly more. I don't know, but at least 25. Now, of course, at the end of the day, they did the right thing. They did a 10-year and a 30-year because of the first 30-year, and it was priced pretty attractively. I think the coupon was 9 1/8. And investors jumped at it. I mean, the demand for that was enormous. I think it was about 7 times over. I think it was 7 times oversubscribed for the billion of the two tranches, right? So, and that just then we had a number of other Africa sort of 10s and 30s. So that seemed to be in vogue in first half of the year, so, or first quarter. So they couldn't have timed it any better in terms of coming to the market.
Would these countries be able to raise this kind of money now?
It would be much more difficult. I think there's certainly an oversaturation of African Eurobonds in the market now, to the point where, not that there is going to be a buyer strike, but there's more differentiation. Now, having said that, Angola was successful in tapping their 30-year. They did this in August. And they priced it at a discount to the secondary market, so there was good demand for that 500 million. So it's not like these countries don't have access to the market, but I think if they did come to the market today, I think investors would be, probably a little bit more concerned about the fiscal trajectory, the debt trajectory in some of these countries, and probably would be pushing a little bit harder for, additional interest, on the coupons. Now, having said that, not to be alarmist, but we've got a new issuer come to the market next week, which is PNG. Now, this is a country which...
Papua New Guinea.
Yes, Papua New Guinea.
Yes.
And apparently the demand for it has been very, very strong from what I gather. Yeah. And I think there's several reasons for that. One is the fact that it's a country with a very low fiscal deficit, somewhere in the order of 2.5% of GDP. Debt GDP is around 35%. It has a small current account surplus. So it's not the Argentina. It's not a Kenya with big twin deficits. It's not, it's a new name, and it does have very low FX reserves. So it's not a perfect story. And, you could say there's capacity issues there, like there are with a lot of other smaller frontier countries. But it's an interesting story, and I think investors are probably looking at it and probably feeling a lot better about PNG than Tajikistan. So Tajikistan came last year when markets were very frothy at the end of September of last year. We looked at that deal and we just thought this was silly expensive.
What was the spread?
It came 50 wide of Ukraine, which to us was a bit crazy, because Ukraine, another sort of single B issuer where investors have a lot more understanding and knowledge of Ukraine because it's been around many, many years. But I think it came at 7 5/8, which looked expensive for us, and we stayed out of it. And it has underperformed since the issuance.
Let me take you back. We were talking earlier about you were in Lusaka, and we were talking about policy making, nimbleness. I think the ability to read the signs and to move at speed, and we're both agreeing that there's a premium for that right now. If you look across the continent, what are you seeing on the policymaking front? What are the examples that are impressing you? Angola, I think, has impressed the markets.
Yeah, absolutely.
Under the new president. There seems to me to be been a political risk rally in the sense that prices came lower because of this perception. And, we've had the Mozambique situation with those defaulted bonds. What are you seeing? I mean, you're now a bond vigilante when it comes to the Eurobond markets in Africa. How would you define it?
I think there's definitely some good stories out there, some improving stories. And there's no surprise that two of those improving stories I would highlight would be Ghana and Angola.
Yes.
And unsurprisingly, they've outperformed the rest of African Eurobonds this year. Now, there's different drivers in those countries. In the case of Ghana, you've had an important election, which the opposition won at the end of 2016. Had the incumbent NDC won that election, I think it would have been a huge sell-off on Ghanaian assets, because they blew the fiscal deficit out late in 2016, because they were under an IMF program that called for the deficit to shrink from 6.5% to 5.3% GDP. And it turned out, new government comes in place, and they said, well, guess what? The fiscal deficit probably is now 9%. So that was set off the alarm bells in London, New York, D.C. I remember meeting with the delegation in Washington last year, meeting with the IMF. IMF was very skeptical that this new team could, put the fiscals.
This current team now.
Yeah, current team, the MPP government could put the fiscals back on track. But I think the advantage they had was, they had been in opposition for 8 years. They had been complaining about the, again, the external borrowing, the high debt levels. Looking at this government and saying, look, we need to address this. And I think when you come in with a mandate like that, I think you can make tough decisions. Now, they also benefited from a significant increase in oil production. So growth last year was on the order of 8.5%.
Yes.
Fiscal deficit went from the 9% region to sub 7%. This year, the expectation is the fiscal deficit will continue to decline to I think the 5.5% was somewhere in the low 5% is the area, and they want to get to 4.5% by next year. They've also passed a fiscal law which calls for a deficit cap of 5%, which is pretty progressive for Africa.
Progressive, isn't it?
Yeah. Now, you talk to the IMF about that, and they're less impressed by that because they're thinking, well, why would you want that straitjacket, right? Because they know, and we do too, that in election years, there tends to be some pressure on spending. Surprise, surprise. And Ghana has a terrible track record with that, right? So, but we don't have to worry about that for a few years now, which is good, right? Angola, you look at Angola, where a very opaque country, investors were concerned about, again, the rising fiscal deficit after oil prices collapsed in 14, 15.
The FX.
The FX being, very overvalued. Now, you've seen oil prices improve, fiscal deficits improved. They have cut the non-oil deficit improved dramatically as well. So there's been, on top of that, you have a new central bank governor came in last year. They've been allowing the currency to adjust under new President Lorenzo, who has a very aptly nickname called J-Lo, which is in the market. But no, there's been, he's pushed away from the Dos Santos family. They've removed.
Well, he's removed all of them.
Oh yeah, and he's done a very, very effective job doing that. They've reapproached the IMF. We thought it was just going to be for a PSI, which is just a step monitoring program. But now they're actually going to physically get an IMF loan, which is great. So they're doing all the right things that investors like to see.
If we look at a continuum, these are the outliers. These are the ones that have performed. Take me to the other side. I mean, Lusaka surely comes out over there, doesn't it? Yes.
Yeah, the other side I would say is more in East Africa. You could say there's some concerns at this point, namely Zambia. And having spent 3 days there, really, going through all the issues, I came away with the impression that there's more negative news in the pipeline there. And the reason being is that you still have this willingness to move forward with the Chinese loans. They've committed to drawing down on $5 billion of new loans over the next 5 years. These are big mega infrastructure projects which are significantly overpriced when you speak to various locals, which feeds into
which is frankly the problem with a lot of these Chinese investments has been the price inflation on.
Correct. Yes. A lot of room for corruption in these projects, right? So the debt sustainability is a real concern in Zambia, and the fact that they haven't been able to agree with the IMF on a program also unnerves investors. So when you look at they're now considered to be in high debt distress, next year the external liabilities will increase significantly. So this year around 800 million, next year 1.3 billion, and this is with a country with reserves of 1.8 billion. So there's viable concerns that these guys need to address the market concerns. What I did find healthy, however, there seems to be a real public debate now about these Chinese loans, about debt sustainability. Government is coming out fighting, putting out comments. The Finance Minister Moana Kwatwe put out a statement this week in Parliament. Not necessarily new information in there, but like saying this is what we plan to do. We're going to continue to service our debt. We have a Eurobond redemption strategy. I would love her to explain that to us. She hasn't. Please call me. I can give her my number. But there's real concerns about the situation, and on top of that, this is a country that's running a very high fiscal deficit. I mean, last year the target was 6.1. That was the sort of signaling we were going to get, and then they've just recently revised it up to 7.8. Now, not that we should be backward looking because we're not as investors, but when you look at that as your starting point, this year's fiscal deficit target is 7.4%. In the first half of the year, they're slipping. So it doesn't look it'll be a challenge to hit that target this year. So it shows you that the willingness to address these concerns is still lacking there, and I think that's why they're being punished by the market, why Eurobond yields are 16 to 17%.
That's incredible. I mean, but how much lower can those go in terms of, they can go anywhere, right?
They go anywhere. I mean, when you look at the spread, the country spread now, it's the same level as in Mozambique.
Yes, and Mozambique is a defaulted.
Yeah, I mean, it must be put in the context that Mozambique is a special situation.
Sitting on all that gas.
Yeah, well, it's not that. It's that it's a well-held bond, and you don't have room for much volatility there. The reason why prices keep going up too is the accrued interest, the PDI on the bonds,
Yes,
right?
yes.
Is running at 10+% the last couple of years while they're not paying. So I think it's an artificially inflated price in my view. But still, when you look at it just like for like, it shows you that Zambia is in a distressed situation. So I tried to explain that to government officials when I was there, and I think they get it. But it's clearly a decision that has to come from the top. It's a political decision to say, right, let's put the Chinese stuff on hold. Let's go to the IMF. Let's put our fiscal house in order. So far, these guys are unwilling to do that.
Kevin, you've been in Lusaka, you've given us a spin around what's going on, Africa and beyond, LATAM and Mongolia and these places, but of course we're in Nairobi. What is your takeaway from the situation here in Nairobi?
I think at a macro level things are improving,
Yes.
so growth should be slightly better than expected compared to last year. We are seeing inflation still remaining well contained within the target. Fiscal deficit expected to be lower, but I think there's challenges here, and I think this is something we're trying to really uncover on our due diligence meetings in Nairobi. And I think on that note, there's still some pushback on the fiscals, as we saw yesterday with the government, very creatively passing their financing plan.
You noticed that, did
Yeah,
you?
exactly. Very amusing to see how they did that.
Almost as amusing as the South African Parliament.
Oh yes,
well, unputdownable.
Yeah, exactly. But no, I think there's this lingering concern. I don't think it's necessarily imminent, but lingering concern that this is still a country running very high deficits, and at some point those deficits can come back to haunt you, right? And I think if you look at the trajectory of the debt, it's continuing to creep higher and higher.
It is.
Hearing
debt service as a percentage.
Well, I was just going to say
it's a huge number.
It's not necessarily the stock of debt; it's the flow of debt, right? It's the debt servicing burden, which I think is becoming more of an issue now, where revenues are falling. And and again, the source of revenues is still difficult, right?
Yes.
Trying to, President obviously wanted to push for a 16% VAT on fuel.
Personally, I thought he had to push that right all the way, because I don't know how he makes up the numbers without some really severe austerity package on the spending side.
Yeah, well, they did announce some other budget cuts yesterday too.
1.5%.
Yeah. So it's something, right? Rather than nothing. So I think. As an investor, when you look at Kenya, you say it's a slowly deteriorating story. It's not something that's going to jump up and hit you hard. But if you look at, Eurobond spreads, interesting, Kenya trades wide to not just a Ghana, which I think, highlighting the fact that the improvement in Ghana's, credit metrics is looking pretty good, heading in the right direction on debt and fiscals and, growth remaining strong, inflation coming down. But it's trades wide of Angola, trades wide of the rest of, basically it trades wide of everything in SSA performing, with the exception of Zambia, right? So, and I'm not counting obviously Mozambique, but yeah, it's it's the markets are definitely probably a little bit more attuned to the fiscal, again the fiscal outlook here than they have been in the past, where. They used to give Kenya a free pass, but when you're running sort of 7 to 8% fiscal deficits for a number of years, and your debt levels are creeping higher, and it's difficult to address some of the revenue-raising measures, it gets the market's attention. And on top of that, they've been issuing more bonds, right? So that kind of starts to feed through to higher risk premiums. So I think that's where Kenya finds itself at this juncture.
My final question is, in our discussion, the IMF has featured quite heavily, and I remember. For a lot of people, they had memories of the 1990s, but it seems to me Madame Lagarde is back playing a very important role, particularly on the continent, and that policymakers would be wrong to ignore the IMF at this point in time. Do you agree with that? Is it important as a signal to you as an investor?
Absolutely. Yeah, absolutely, especially in this environment where the external environment is getting a bit more difficult in terms of financing. So it's a combination of both the financing and the monitoring, right? And you're hopeful that these countries, with another set of eyes, important eyes, watching over that they'll, and again, there's a number of reviews that they have to go through. So that's another signaling to the market that these countries are staying online with their programs. So there is always going to be slippages, right? And we've seen it even with Ghana, right? The last couple of years where there's been delays or setbacks with the IMF, but they've largely, certainly got back on track and exceeded expectations, and hence they're being rewarded by the markets. Right now, in the case of a Zambia, clearly reluctance to go to the IMF, that's a signaling, right? Interesting, I heard when I was in Lusaka was that when Kwatwe was in DC in April, and I did meet her, it was the first time because she had just been taken over as finance minister shortly before that. I'd heard from somebody in Lusaka that when Lagarde saw her, she says, "Madam, you need a program." So,
wow.
You'd hope she took that to heart, but obviously she didn't. So, but yeah, I think it's, as an investor, you like the fact that there's again, an important discipline there, an anchoring there that the IMF does provide. And we've seen success stories to some degree in Ghana. We've seen a great success story in Mongolia. We entered a program a couple of years ago when they were in distress. Argentina, jury is still out there.
Yes,
but
the currency's improving a little bit.
It is. Well, there's a rumor that package could be up to another 15 to 20 billion. So that's giving some markets some confidence. But 50 billion wasn't enough. That should tell you something, right? That we're in a tricky environment because with Argentina, the big problem there was not the orthodox policy response, which I think has been, they promised to deliver on. It's the fact that ownership of Argentina was so heavily owned. Everybody, it was a consensus overweight. So if you're overweight Argentina, it's a tough decision to add more.
So the market was long.
Exactly. So you don't have a marginal buyer. So it's going to take time for Argentina to get out of its mess. And let's hope this is not a case of throwing good money after bad, right? So but IMF, I think if you ask most investors, they would say in countries that are in need or in distress, it's a good thing to have.
Kevin, thank you very much for spending some time and giving your thoughts. We really appreciate it.
Sure.
Thank you. Thank you.